Hope everyone's having a good day and a great start to the week. So coming into today, we had a small pullback bull trend, fairly typical of one. So, coming in, looking at this, start at 60 minutes, very climactic. We hit the target, which was this is August 17th high, basically the start of the bear trend and the sell-off. We hit it, strong enough where we may actually test the all-time high, maybe tomorrow. So, and again, this is, I'll mainly be discussing an always in perspective, because I think if you listen to Al Brooks, that is, he will say, and I completely agree, any trader starting out should only be focused on always in, and they should be focused on looking for stop entries. And if they cannot find a good stop entry in the always in direction, they should wait for a breakout with follow through and enter then. And if they don't find either of those, just don't trade. So coming into today, we had decent sell-off, probable exhaustion. Bar one, okay, buy above. It's a decent, not a great, low probability betting on the low of the day. You can see a lot of bulls bought it. You could buy this close, stop below here even, but it's always in long, so only look to buy. You could buy this close. So it's buy the close, but you got to notice, breakout, bad follow through, breakout, we're probably going to have bad follow through, which we did. High one buy. It's probably a bull leg in a trading range. I think it's an okay buy. It's always in long. Here you have a possible parabolic wedge, first push, second push, third push. I think it's okay. From an always in perspective, I think it's okay to short below, or not short below, excuse me, to sell out of longs below. I would not short just because you haven't really had any evidence of prior selling pressure. For example, here we're always in short, decent breakout, not really a great breakout, but it was a breakout of the channel, or this spike down, broke out, pulled back, creating a double bottom, so it's a decent buy here. Here, with 3 pushes down, you can argue a spike and 3 pushes. Sorry about that, if you just heard that. Here, very tight channel, so I'd probably wait. I think it's okay to get out of longs though. If you're determined to stay always in, you get long above that bar. You buy back, you buy back your longs. Excuse me. Sorry, I'm still a little tired, so it's hard for me to completely focus. Anyways, I think you get long again if you're determined to stay always in above this bar. Stop, maybe below here. You put it below the bar, but it's right at the moving average. I'd put it down here. Good breakout. However, one thing to notice, failed. We could not close above the high. Not great follow through. You can argue 3 pushes. 1, 2, 3. Not a great signal bar. I think, if you get out, maybe you buy back. You get long again above this bar. Double bottom, micro double bottom. But, certainly not easy. It looks like a trend in a trading, a bull leg in a trading range. However, notice here, breakout, bad follow through. However, you have to remember the strongest trends form like this. And you're probably wondering, what do I mean by strongest trends? A small pullback bull trend. Why? See if I can give you an example. That's similar. There's a better one. We had it a while back. Here we go. Look right here. Now this is obviously stronger than the other day, but it's always constantly trying to reverse here, here. Tails on top, not really that great. This other one, right here, this was a stronger open than we had. However, we sold off, sideways, went up, sold off. Why does it do that? This is a strong trend because first off, you don't get consecutive strong bull bars, so bulls will buy and look to buy pullbacks. So every pullback they're buying, buying. Bears see that, weak bears and some institutions will trade small and they'll sell below bars. So they think it's a trading range or a leg in a trading range. They sell, get stopped out, sell, stopped out, sell. So every time they have to buy back short, they're adding to the momentum up. And then finally at the very end, we get a possible exhaustion, which it ended up being exhaustion. And also, so I hope that makes sense. And what I mean by all that is classic example as well. I'll explain this in a second. When you get a small pullback bull trend, usually price is drifting up, which allows the market to stay stabilized. If it goes like this, if we go from here and then we get bars like this right here and just go up and up and up, it's climactic. It's unsustainable. The risk gets too large. The bulls will see it as a gift. Kind of like one of those. We had it the other day. Right here. Going up and up and up and up and up, and then we get stuff like this. Just kind of, bulls will take it as a gift. If you're long through this and all of a sudden you get 2 or 3 huge bull bars, you're gonna take profits. The risk will get big. You need to lower your risk by taking profit, and the odds were you made way more than you expected, so it's a gift. Here, notice this. I took this measured move based upon this pullback from this high to this low. Here's 50%, so let me get rid of this. So right here, from here to here, that's arguably the largest pullback of the day. Very often, when you get a small pullback bull trend, you'll get an exhaustion at some point, so you get a gift. And this was right here. Bulls will see this and say, okay, that's a gift. So if you bought anywhere through here and you held, you got a big exhaustion. You got a gift, you're going to take profits. And you're probably going to look to buy pullback. So what is a way you can measure the pullback? Well, you can wait for a 10 bars and 2 legs and a high 2. Some bulls, generally for a scalp, will look and say, okay, here was the biggest pullback of the day from this high to this low. I'm going to buy 1.5 times that. So it's this blue line here is 1.5 times this pullback. So from this high to here to here is this size, and add half of that, and then you get 1.5. Now look how this is not a coincidence. We paused right here, and then we got a scalp up. If I was taking that, I'd take it for a scalp. And also, bears will sell, and they'll use a measured move based upon the bodies. They didn't get stopped out, they probably made money, so they sell this close or this close. Target here. And that's kind of advanced thing to do, though. It's hard to do. So let's go back real quick and find a clear. Let's use this. Okay, so small pullback bull trend right here. We could say, okay, here's probably the biggest pullback of the move. This one did not quite reach it, actually. Didn't happen on that day, really. So let me see. Let me find a more obvious day. One second. I'm not really finding what I'm looking for. So anyways, bulls will buy above, maybe get out here, but if they do, I think they have to buy back above this bar. If they buy, if they get out here, same thing. Double bottom, buy above it. Here, I think it's reasonable to get out on this bar or here. I would not short. And then where do you get long? Maybe above here, maybe above this bar. You have to be thinking about a possible, here's a trading range, something like that. You just have to recognize that it's a small pullback bull trend, and until the bears can really get 3 or more consecutive bear bars, it's really not going to go anywhere for the bears. Notice, find 3 consecutive bear bars today. I'll make it easy. So look at today. Where do you see 3 decent consecutive bear bars? There's here. Here are the only 3 bear bars of the day. That's strong. That is a strong trend for the bulls. Look at this. Here's 15-minute chart. Here's a 60-minute chart. We had 1 bear bar today on the 60-minute. That's why I say small pullback bull trend you cannot sell. I mean it's so hard to sell. I mean even with limit orders, it's very difficult. It's not worth it. And if you're not consistently profitable, I would not worry about it. So how do you trade a day like today? If you can recognize that it's always in long, even if you first time you buy here, buy above the bar, and let's say you're long through this, and it's getting difficult to decide whether or not you should get out. Consider this. I've done this before. Pop up a 15-minute chart. So let's say you're long somewhere in here, and you say, okay, 5-minute chart's too confusing. I'm gonna go the higher time frame. There's nothing wrong with trading a higher time frame. Just make sure your stop is in the appropriate place. Excuse me, and that you're willing to accept the risk. Nothing wrong with it. So if you're long through this, say, okay, I'm gonna put my stop down here, and I'm just gonna wait. And you can look and see, this is very strong, very strong. And even if you don't like this, bump up to 60. Just say, okay, I don't generally trade at 60, but I do like the 15-minute chart personally, because even on days like today, small pullback days are kind of boring. It's always trying to reverse, and it's never quite good enough. Also, I just coincidentally, like as this second, just happened to see Al's book on, it's his first trading price action, it's his first trading price action trend book, the second volume, the 3 books, trading trends, trading ranges, and trading reversals. And if you go to chapter, give me 1 second here. It's small pullback trends. Oh, it's chapter 23, trend from the open and small pullback trends. It's been a while since I've read it, but I remember that book, that chapter, because what he talks about is he explains why these why this is the strongest type of trend. Small pullback trends are the strongest types. For example, let me see if I can find you a few. And I'm not going to really talk much about today just because you just have to understand what's going on. So, just going to open up all of those. Hope I don't overload TradeStation. Good. So here we go. Wait. 1 second here. Yeah. So here's it. Trend from the open. Very strong. Just look to get long. You get 3 bars, but then it reverses. The bears would like this. They like to see 3 bars. However, when the bears get 3 bars and then the bulls get 3 bars, the bears get trapped. That's a problem for them. And we drifted up. However, this happened. This is a low probability event. It's actually 2 low probability events. You had a break below the moving average, first time it touched, and followed through. And we tested all the way down at support. This was a logical place for bulls to have stops. We tested below it, stopped out weak bulls, and turned right up. However, the odds favored any test being a minor reversal. So similar to this. Micro channel, we tested up and we had to pull back, allowing sell the close bears out. We didn't do that. Whoops. Here we go. Here's another one. Very tight breakout, 3 bar breakout, 1 bear bar breakout, bear bar, bull bar, bear bar. There's just not 3 consecutive bear bars. So the pullbacks are deep, but look at this. Look how strong that is. If the odds are high, we're going to get a measured move. And it was actually a measured move to the tick. So here, looks like we have a trading range. Broke below a trading range, as you can see. So we opened below a trading range, we tested up, we basically touched the moving average. So in terms of how would you trade this day always long, always in? Well, from the open you could say, gee, maybe it's always in short because of this gap down. However, it's a trading range, a lot of trading range price action. We may close this gap, which we did. So if I was starting out, the only thing I would do is say, okay, maybe it's always in short, but not strongly. So I'm going to wait for a stop entry trade or a breakout with follow through. So nothing to do here. Arguably this stop entry, but it's not really that great. It's not. It's a limit order market. Sellers above, buyers below. Here, decent stop entry. You can argue it's a low 2 legs. Here, here, here. So ABC, first leg, pull back, second leg. Or you can wait for this breakout. However, there's one really interesting thing about all this. Bulls who bought, they could not even trigger this you call it a triangle, whatever you want to call it, big breakout bar. We're probably going lower. Bad follow through kind of makes it questionable. And then we broke all the way down to here. However, Here, this is kind of a very interesting example. So, yes, the bear's got a breakout, but where's the follow through? This tells me trading range. It's a trading range. So we may test back to this area. Bear breakout, bad follow through. Another bear breakout, okay follow through. But you have to wonder about this. Maybe we're just getting a measured move down. Maybe here's the start of the breakout. Maybe the spike started here. And if this is the middle, if this is the trading range, which I think it is, if the spike started here, spike down, here's the middle, it may project down here. It's also probably some sort of support. And look what happened. Close this gap and we're reversing up. So let's say you were short through this. You get a reversal bar, another reversal bar, another, and 4 bars up, 5 bars up. This is not good for the bulls, for the bears. Think about scaling bears. What if you sold this close? Are you really going to find sellers below 5, 6 consecutive bull bars? Probably not. So you have to think about the possibility of this, which we got right there, or maybe even something like this. Also, let's look at this. The open was 1150. The low was not quite 10 points. Anyways, see, sometimes I was looking to see if the open of the day was 10 points, if the low of the day was 10 points below the open. If it was, maybe bulls bought 10 points below the open, betting price would test back to here. So look at this. This is kind of interesting as well. What I'm looking at is, say you bought here, you bought the low of the day. Here's your actual risk. You can see a measured move target was up here. It's kind of irrelevant. Anyways, point being on this day, once you start to see this, we're forming a small pullback bull trend. Buy, put your stop down here, and just hold and wait for 3 consecutive bear bars. Look at here. We get a low 2, a 2-legged pullback, 3 bear bars, but a bull bar, and another bull bar, and another bull bar. This is a problem for the bears. I'm probably going higher. So, hope all that makes sense. Here, that's not. Another small pullback, tested down to here, turned up. So you get the point. Here's kind of a similar to today. Strong spike, started to channel up, forming a small pullback trend day from the open, and just went sideways for the rest of the day. And we got a possible exhaustion, and we tested down. So it did it again. Anyways, that is really all I have for today. Again, nothing special. And on a day like today, you just have to look to get long. Do not look to short. So I hope this helps, and let me know if you have any questions. Thank you.